Hello traders, again Gustavo Rubi. Today we are going to learn two concepts, the retest rule and the buffers. Now let's start with the retest rule. I choose this box which was generated on Wednesday 26 November at London session. Place your attention in the optimal trade entry level, please, here. Because it was a sell, I'm going to represent as always as a red line. You can observe that after filled our order, price give us a little bit of hit, roughly to the half of our stop loss. Then market reacted down. Okay, now look very carefully where the market stopped. If you measure your take profit and your optimal trade entry, you will see that even the bodies of the candlesticks here, bodies of candlesticks respected this level. You will expect in all setups that roughly at half of take profit, we are going to find, in this scenario that we are shorting, you're going to find support. And you will expect, it's even perfectly normal that price retest our entry level. It's normal. It's even normal that market tries to hunt our entry fractal, which is this high. We are expecting that. We are not panicking. It's normal. But, however, after the retest, we are expecting a clear, unambiguous reaction towards profit. And it happened here. It reacted our level and went back to profit between these two lines, between the stop and reverse and between the stop and reverse stop loss. However, market consolidated around this level. And this is a very bad signal because we are expecting a reversal. Because after the retest, we need clear reaction towards profit. If it consolidates, and moreover, you can see the close of the candlestick closing above this level, this is a reversal. If you identify this pattern and you're very sure, try to collapse your trade, break even negative, break even positive, however, but because we know a reversal is imminent. What's the next step? Next step is use our stop and reverse level, which is here. And it was a loss because we're going to set our stop for our buy here. You see? Even we enter in a buy here, we got a stop loss. So, for this setup, we had already two losses. You know the rule. You know that because this happened, and this time I'm going to represent with a trading view short position. After this loss, I'm going to short the market again. I know exactly my stop loss and I know exactly my take profit. However, as we watched in the previous video, we are going to aim at 1 to 3 risk reward because this is the third attempt, because we want to win. And this is how we can win the setups. About expectancy, you can expect a 90% win ratio. And the 10% that we are losing by 4 times. So roughly you're going to obtain 6 Rs and you're going to lose 4 Rs. So we have a very, very positive alpha, right? Now that we understood this setup and we understood this retest rule, let's go to the buffers. And for the buffers, I'm going to use another signal. Let's use this one. This signal mathematically was a total loss, because we lost the first setup do not need to draw more boxes because it happens in the same box. We get our entry level and we lost. After we lost, of course, we are going to try to set our stop and reverse level, which I will represent with a green line. Okay. So if I'm very strict, very strict, by the millimeter, this setup is not filled. Okay. And what we do to force a little bit the entry level, we use something that we call the entry buffers. For this example, after losing this short, we are going to go long. So, going long in this level, we know already the exact level for our stop loss, and we know the exact level of take profit. Okay, now, market didn't reach. I'm going to buffer the entry level a little bit up. Why? Because the model is mathematically perfect, but different brokers, different quotation, plus spreads can mess up everything. And we are going to do the same with the stop loss. The stop loss, we can expect, or we are able to expect, that the price reach this red line, but never go beyond this line. So in the event that the price reach this red line, we need to buffer a little bit down to consider the spread. And we're going to do the same with the take profit. Okay. However, in this example, even we place a buffer, place your attention in this fair value gap here. Okay. But even if we buffer this entry and it was perfectly drawn in trading view, in the practice, maybe it will be not filled. And we're going to lose this trade, because if we don't get filled here in this long, we are going to get busted here. And I remember that this was a loss. So this box was totally lost. I'm just to explain you the buffers. Important thing is that you understand why we buffer and how much. This is your own individual practice. When you reach the step, when you are doing this on demo, depending on your broker, your quotations, you're going to check how much you're going to do to apply the buffers. Of course, I recommend you that you get a very good ACN zero spread broker to apply this strategy. For your massive success, Gustavo Rubi. Bye-bye.